If this is a disruptive change as we think it is, how do you think about what kind of companies do well and which don't? Like, what are the attributes? Is it a management team? And in particular, the companies that we love that are throwing off these dividends, are they in any way at a disadvantage not being able to invest that capital in a transformational change like this relative to competitors? So who's going to do well in a disruptive change?
The answer is going to be that the most astute, proficient companies that are themselves investing in the answer to that. Now, look, the concern that it's a capital intensity issue, I do not agree at all that operating enterprises are going to lack the capital intensity to invest in their own improved efficiency. There is a, let's take a regular S&P 500 company that's a healthy dividend payer, has a dividend payout ratio of something in the range of 50% of their free cash flow. So there's already a certain CapEx that has been reinvested into the company. And then there are other uses of cash flow, sometimes stock buyback, sometimes debt reduction, sometimes M&A. And then there is the portion they're paying out to reward their shareholders in the form of a dividend. The very heavy capital intensity here are from the companies that either have almost no revenues at all, your open AIs and so forth, or the hyperscalers that are buying the computing power to provide it to others. And they have a substantial ability to fund to raise equity or to just fund from being some of the greatest cash flow generators in human history. But when you're talking about the companies that are going to be the future customers of AI,
Yeah.
McDonald's, Walmart, Procter & Gamble, Pepsi, and you could go into much smaller cap companies than that. There is no sense in which they will forfeit access to capital markets if need be, or the CapEx money needed to fund their own growth by forfeiting the dividend. What they would do is risk up the process and undermine the very investment thesis and likely use equity value that would be useful in funding some of the very investment you're talking about.